Talking about your money, new month, new cut. The Federal Reserve slashed interest rates today for the second time in 3 months, likely setting the stage for a drop in borrowing costs. The National News Desk, Jeff Harris joins us. Jeff, economists expected another cut would be made before the end of the year. But what does this all mean for Americans?
Well, the cut made today was a quarter basis point, Dee, what was expected here. Now, as for what the cut means for our wallets, it could help mortgage rates and also could help savings accounts.
Jared Pinson, an assistant professor of economics, tells us the biggest impact from today's rate cut is on loans.
The lower the federal funds rate is and the other interest rates that the central bank influences or control, the lower you'll see interest rates on borrowing.
But aside from loans, Pinson also says today's rate cut will impact savings accounts.
Not just on what you would spend on, but also on what you would save on.
As for whether or not the results from this week's presidential election played a factor in the rate cut, Pinson says no.
The presidential election and what the incoming Trump administration is at least planning hasn't affected how they are thinking about their monetary policy.
One thing reportedly being planned is possible tariff increases, something Tom Smith, a finance expert, tells us could impact rates if put in place.
You're definitely going to get a situation where you could have upward pressure on prices, which then might force the Fed to increase target rates again.
But Smith says in order to get a clearer picture of what lies ahead, we'll have to wait and see which policies the new administration puts in place.
We just have to be aware of how these policies unroll and what their potential impacts are.
Now, according to the Federal Open Market Committee, by the end of this year, interest rates will fall another quarter basis points and a full percentage point next year as well. Reporting for the National News Desk, I'm Jeff Harris.